Hi, this is Dave with the Stock and Options Room of the ShadowTrader Live Trading Suite, and today I want to take a look at a trade I did and a few adjustments I did as well. That's one of the unique things about what I do is that I will try to adjust a trade and be able to create a little bit more profit than just doing purely directional trades. So the trade we're going to be looking at is from Thursday, and starting off with the daily because I did it on the S&P 500 index. So here is the candle we wound up with, and what I was looking at earlier that day before we had this close is that we had some support, potentially from that low. We also had the gap up here, and ultimately you can see that we did, even though we went down to that low of that day, it ultimately did hold as support. But with intraday trading, you need to be precise more than higher level time frames. So ultimately this was a trade that I wound up losing on, but I think there's a lot more to learn from this. We tend to learn more from our losing trades than our winning trades. At least I know that's true of me, probably true of most people as well. So let's take a look at this intraday, and I'll walk you through the actual trades that I did. So here is, we can use a 5-minute, and so here's Friday, but the trade was done Thursday before we knew any of that bearishness was going to happen. So I'm going to pull up the trade alerts right here, and let's put them here. So these are the actual trades that I posted in the room. I just copy and pasted them right here. So let's walk through these. So and these are Central Time. Starting with this trade, I sold a bull put. So this is at 10:25 a.m. Central Time. So that was basically right around this candle, it looks like. So, at that point, sometimes you can get a sense for, something has spent enough time basing, and, it looks like it might be ready to go up. I had a hammer candle here. So that was the idea, is that we would take out that high. We clearly didn't. So during this candle, I could get a sense for, okay, we took out the low of that candle. We could be going down. So what I did, I started off with a 59.50 short put. So I rolled that down to 59.45. So that cost me 45 cents. But I was able to pay for that 45 cents by selling a bear call. There was resistance up around 6,000. So on this trade, I sold a 6,005 60/30 bear call for 50 cents. And so I also explained that in the text alert right here, to say what I did with these two trades: rolling the short put down, one strike, selling a bear call to pay for it. So what this does is it preserves my cost basis with the original credit, right? So if I pay 45 cents but take in 50 cents, then I'm still walking away with an 85-cent credit. I mean, a little bit more, 90 cents, because I, took in an additional 5 cents here, but I'm trying to cover the transaction cost as well, ideally. Okay, so ultimately, though, with this kind of price action, I have to get the idea that really, this trade isn't working. I gave it one last shot. So this is at 11:17, and that basically is on this candle, roughly during this candle. I can see we have a new low on the day. That's not what I want. And at this point, we have 3.5 hours left in the day, something like that. That's really not what I want. So basically, I rolled the put down, and I paid a 20-cent debit for that. So like I said, at that point we were up 90 cents. So I spent 20 cents to roll the whole spread down. So at this point I had the 59.45 short put. I rolled it down to 59.40 to give a little bit more room to the downside. Also rolled down the long put, and then that cost 20 cents. So it did chop around after this, but basically once that candle happened, then it was not able to get back up. So that's why I posted this alert, said, hey, we're at the lows of the day. I really needed a bounce. We didn't get it, so ultimately I wound up just closing that out, and that I took the loss on the bull put, and I took the profit that there was on the bear call. And the bear call was there, helpful for covering some of the loss. Had I not done these adjustments and just let it go, then the loss would have been greater. In one sense, some people might look at this and say, okay, well, you sold the 59.40 put, ultimately that expired worthless, but that's not really the point of the story. Once you get later into the end of the day, then it just becomes a lot more expensive. You can see there's the close. So ultimately the trade would have worked, but that's not really the point. You don't really want to get too close into the end of the day. You're taking a lot of gamma risk then, that type of thing. It's really turns into a poor risk to reward situation. So that is it. Hopefully that was helpful to walk through that trade and some adjustments. All right. Hopefully I will see you in the room. Take care. Hi, this is Dave with the Stock and Options Room of the ShadowTrader Live Trading Suite. If you want to trade 0 DTE options live and in real time with me, click the link in the description below. I wish you good trading, and I'll see you in the room.